Hi everyone, Sherman here. So today is the 10th of May, and I was just looking at Monte Carlo simulation when I on YouTube, and then I came across a couple of videos. I found this one quite interesting, and looking back at the different types of trades that I've done, looking at the different courses that I have seen. I quite like what was presented here. So I'll actually post a link to this video. It doesn't have that much views, but it's really good information, you know. So let's talk about the different kinds of trading styles that I've seen, and possibly might have been that you're familiar with also. So let's look at system A first. All right, system A, you're looking at win rates of 20%, a low win rate, which means that you try to get in on trades. Typically, it's something like that, and then you're trying to actually catch this move. You think this is gonna go. You think this is gonna go. You think this is gonna go. But somehow it doesn't happen, and finally, this goes. So the win rate is small because, you actually have to take a loss here because it actually came down. Then it came down. You actually have to take a loss. It came down. Actually, you took a loss, right? And then finally, when it goes, um, you know, you're supposed. The idea is supposed to make back all the losses that you took when you're supposed to earn back all those losses, and make more money. And that's why the risk. This is our risk reward ratio. Okay, it's supposed to be large. It actually can be 1:3, 1 maybe 5, 1:10. Amazing risk reward. But the problem most people get with this kind of trading styles is they often get stopped out. Hence, a low win rate. You're supposed to get losses, and finally one will go. Now, my view on this kind of trading is I don't think that it is suitable for everybody, and because not everyone's able to handle this kind of losses, where the losses might be small, but psychologically it's kind of hard to do, right? Imagine you try to it's a lot like MLM style. You get someone to join your downline. Hey, do you want to join my downline? Let's do some multi-level marketing and let's get rich. You ask the first guy, second guy, third guy, fourth guy, fifth guy, sixth guy. Now, probably end up the 10th or 11th guy, someone will say yes. But imagine getting rejected all the time. Or let's say you're a guy who goes to a club, you want to pick up some girls. The first girl rejects you, second girl rejects you, fourth girl rejects you, fifth girl. Finally, the eighth, ninth girl, it's a numbers game. Finally, someone is going to say, hey, let's go somewhere. Well, after you've been rejected 7, 8 times, do you think you can actually get that? That's my question to you. If you can do this, then you might be a good multi-level marketer as well, and maybe you're able to face rejection. Right? But I think majority of people don't do well in MLM, and this kind of trading, I would say 80% of people will not do well in this. That's what I believe. All right. Now they come under system B. I've seen some guys, they trade system B where they win most of the time. All right. The risk reward ratio is actually inverse. It's not 1:1. It's actually 0.4. It's less than 1. It's less than 50%. Right. So for example, let's say price actually came down here, went up there, came down here, went up there, came down here, and then they said to buy. Just to make a small amount, and then they put the risk slightly bigger. So you can see this is the reward, this is the risk. I put it as a big R. This is the risk. The risk is actually bigger than the reward, but because they win so often and they can take so many trades, they're actually able to do very well with system B, right? Of course, there is going to be one loss, but so they're expecting a high win rate in order to allow them to account for this one loss over here. Now, this kind of trading is generally good for very low time frame, like the 1 minute or 5 minute time frames. So But I also say this that I'll say this. I also feel that this kind of trading is actually good, very good for algos because the one problem with B, and I experience this, is sometimes when things have to go wrong. Let's say you've been winning all the time, and sometimes things have to go wrong. There is a chance that discipline might fail, and we end up thinking, instead of taking the loss, we think that this one can actually reverse and come back there. This has happened to me, and of course some instances where it does not even turn back. Because why? We want to just get out for break even, but it does not even allow you to get out for break even, and it just keeps going, going, going. And because of the the high win rate, gives us the overconfidence that this will definitely come back. But that does not happen, and once I become overconfident, this one just kept crawling down, and then you get a huge loss that wipes out all the gains over here as well. So this kind of trading requires extreme discipline, all right? Not be overconfident, and that's why I feel that because one's required to take so many trades, you need to develop a very good algo for this because it's humanly tricky. I'm talking from the psychological point of view. It's humanly difficult to do. I see people go into big martingales here. They start double up just to try and recover, and that's one of the problems that can happen, right? So this needs to be done with algo. It's best done that way. Okay. Let me just clear all drawings. So we talk about B, talk about A. Let's talk about C. Now, C is something that is more humanly possible. Now, if you were to ask me which style do I trade A or B or C? Now, the one that I like both B and I like C. I don't like A because I already explained. If you have to be stopped out so often, only finally to be able to hit the big reward, it's humanly not possible for a lot of people. And if I was to work with a group of like 5 or 10 traders, and everyone is suffering defeat after defeat after defeat, and people will start to doubt the system. That's the main problem. That's why I think that C is the one that is best used if you're actually doing manual trading. The win rate can be better, maybe not 50, 60, if one's able to tweak and know the pair. Risk reward 1.25 or more, 2 or 3 is fine. At least 2 or maybe 1.5. Because why this is good is because being able to know how to win, the feeling of winning is important. And as a human trader, if every time you win, you get back more than what you lose, it's also a good feeling. So I'm talking about trading more from a psychological and feeling point of view, rather than what's humanly possible. So that's where I'm coming from. I want to talk about what's humanly possible, and I also want to talk about people who have to work, who are teachers or engineers, or maybe you're a soldier, you're working full time, and trading is your part time. Well, if trading is your part time job, most people try to sell to you, hey, you know what, you should trade the 4 hour and because you don't have to worry about the market so much. Well, here's the thing: if you are someone who's doing trading part time, actually, B is also a good option. In fact, I would strongly encourage you not to look at A and not to look at C as well. C is something more for people who are full time trading, because to get a win rate of 50 to 60% and a good risk reward ratio means the trader knows something in the market and he knows when to enter and when not to enter. In order to do that, you do need to monitor the chart, the timing and the chart patterns. If you're working full time, there's no way you can monitor the chart patterns. Certain entries have to be done on the 5 minute, have done a 15 minute, and you are aiming for maybe a 1 hour target, but your entries are on a lower time frame. And once you miss those entries, you can't actually hit a 4 hour target because the risk starts to mess up. You're not going to get this beautiful risk reward. So C is out, unfortunately, and I don't want to recommend A because, as you can see, when let's say a guy is working and then he just lost trade after trade after trade, it's going to affect him psychologically at work itself. And what's more, if the trade is offering negative swap, can you imagine price action? Let's say it goes on like this. For whatever reason, you took a buy, you took a buy here, you thought it was going to go up there, but it didn't go up. It came down, and all this is negative swap. By the time it comes back here, maybe after a long ride, it just plays around and it comes back up here. You can't even close out for break even because the swap might be that much that you actually need to go up higher before you actually make money. And what are the chances when it comes up here, you can survive until it goes up there. When you've been drawn down for all this time, and when it comes up here, you're still not in profit even. The chances are psychologically, the trader might close the trade for break even right there, only to see this start to go up. I think this is something that would affect most people who are trying to do a 4-hour or daily time frame. If you want to do a 4-hour time frame, you would actually need to cross-reference with the lower time frames for entry, and that would then that kind of traders would come under a system more like this. If you combine the 4-hour with a lower time frame, or maybe even the 5-minute or the 7-minute or 10 minute entries, you will come under C. But because your entries are going to be more spot on, right? But for traders who don't know how to do scalping and they try to get that, and they want to get a 1:3 risk reward, and they don't understand this, let's say the 4-hour, and they're trying to get this to go and get that to go and get this to go, Not many people can do that, and it will not be fair to teach people this kind of systems, right? If 80% of people who do it are not going to do well, because psychologically most people cannot handle that. If you can handle that, then the only way I could see this working is if, let's say, I was doing something like this. You see some of my charts on gold where you're buying at extreme low and you just walk away for 3 weeks to see this come up to there, and this would have done all kinds of crazy stuff. But you just stay in it because you were right at the bottom. Then your win, then that win rate would be here. And for this to happen, you need an extremely good entry right at the bottom, right? If you get caught anywhere here, you're going to go in the draw immediately because this is a daily time frame, right? So
three system. Which
okay? One? Oops. Okay. So also, if you're a new trader, or again, if you're full-time, these is actually a good idea, because if you can experience just winning, like you can say, oh, you know what, I'm going to trade a 5-minute time frame or 1-minute time frame. I'm going to take at least 6-7 trades, and win or lose, out of 10 trades, I'm going to try. Let's see how many I win. And if you take 10 trades, let's say within a period of 1 hour in the morning or 1 hour at night after you get back from work, that's it. Just close your computer and go do something else. It's just like playing a video game, or like Counter-Strike or Dota 2 or Fortnite or Street Fighter 5 or Sekiro. You play the game, you die, that's it. You tried 5 times, you won 3 times, you lost 2 times. Okay, you just close your video game, right? You play Counter-Strike, you lose, that's it. You just quit, and then you go to sleep. So you can treat trading just like a video game. You come here, you play, there's 80% chance you will win, and that might work for you, You trade, and then after, if it works, it works. You don't work, you just go to sleep. And the next day is a brand new day. You don't need to worry about the trade. Is my swap positive or negative? You're working, you're checking your mobile phone. You don't have to worry about any of that. You only worry about trading 1 hour in the morning, 1 hour at night, as per when the trades are most active, right? So sorry for that. And so I think that's just what I want to share. I thought this was a good video. So are you a System A trader, System B trader, or System C trader? This is a good video. So I'll just end it right now. Let me see. Also, I'll post a link to this video I was looking at. All right, take care. Bye-bye.